Welcome to StockShark. We're going to cover what happened last week and upcoming week, what we could expect, what individual stocks we can buy, and I'm going to give you a broader picture as well. Today is 17th July 2021. Let's begin with last week wrap.
So if you look at various composition here, the tech is 2.3% from 52-week high. The real deal is, a few of them look like, they are deteriorating. Few of the sectors, especially if you look at financials, look like, they are down almost like 6.4% from 52-week high. Then industrials both shows real weakness. And if you look at the 52-week high, tech is still only just 2.3% away from 52-week high, but still, it shows weakness. Last week it dropped, really bad, because on Monday, Tuesday, it was trading almost like a all-time high, and from Wednesday, Thursday, and Friday, all 3 days, it was dipping, and dip buy was not working at all, especially Friday. If you look at the market close, no recovery at sight at all. So there are some weakness persist. So one has to be really careful next week. Because there will be a FOMC meeting the following week, so you could expect high volatility. Also, the lot of earnings start pouring in next week. A notable one is Netflix. Probably, will kickstart our tech view actually. Let's see, what their earning and how their earning would look like. But if you look at, real estate is not bad. It's just only 0.68% from all-time high. Then consumer staple also not bad. It's only 0.9%. Then healthcare, especially, United Healthcare actually went through roof actually. But real weakness I'm seeing here is tech is weak, financials are weak, and industrials are weak. So it's on energy is it's really bad. It's almost down like 14% from all-time high. So right now the momentum is really bad on energy. So next week I would be very cautious, and go with only selective scripts. I'm going to go over those details in the next screen. Let's go to the chart and see, how things look like, and the things that would make some money for us. So right now we are looking at SPY ETF, S&P 500 ETF. I would always start from top to bottom. I look at, before I going into the individual ETF or individual stock, I would try to look at the macro picture or the broader picture of the market, then arrive at some sort of opinion the market would look like next week. Then I will go and do some top to bottom approach to pick up some individual stock where it shows strength technically. So let's start from SPY, where if you look at SPY, actually, yeah, it's terrible actually. Last 3 days it went down. If you look at RSI from 70 to 55, that's a steep drop actually. Even though it doesn't look like a steep drop by looking at the price action, because price action, if you look at, it's from all-time high of around 437 to 431, it looked like only like close to 2% drop, but the technicals look like a bit weak. That I don't like it. So if you look at the RSI steep drop, this is really steep drop. Momentum is a steep drop, so one has to be really careful next week. I'm staying neutral. If you are investor, I wouldn't recommend anything to do with that, because intermediate and long term look still bullish. So I'm not suspecting anything. But for short term, for next to 2 weeks, I would expect really, a dip in the market. We may we may dip close to this area. So I'm bit skeptical whether whether we would stay at the same level or up. I would be bit skeptical on that. I would expect market would dip next week around 428. Sorry, yeah, 428 to 430 area may even try to touch this 50-day moving average around 420 to 423. So caution is warranted. I would recommend raise cash in your portfolio if you are a trader, and it's nothing wrong waiting in the sideline until market gives you some clarity. But right now I'm expecting market look like going down because internals are really getting weaker, so be careful. Next one, I'm going to pull this triple Q ETF. Same story like um, SPY. A sudden drop I see in the RSI. It's almost but still it's a bullish zone. The big tech ETF triple Q. It's only 60. So, it's okay, right? I could recover because of two major component in triple Q, that Microsoft and Apple actually stayed really well. We will look at that chart in next week. So, but ADX also 27. So I feel comfortable when ADX is about 25. So because the earnings are coming up following week after this next week, right? So from 27, 28, coincidentally, there is a FOMC meeting also there. So I would expect really volatile, but still, if I am intermediate or long-term investor, I still keep it short term. I would trade next week very carefully, raise some cash, and nimble my position to the extent that I feel okay about my risk management. Then I will try to pull small cap IWM as well. It's really bad. It's really bad. IWM, if you look at, it's been same since February. Since February, it's like a box. It's in the trading in the same area. So that's and it's the I feel like the bottom is almost in around 210. So when it hits 210, I would be buyer of IWM. I will start initiating new position. RSI is almost oversold condition. It's reaching almost 32. Momentum is also look like reaching bottom. ADX is gaining traction. It may dip, but look like it's gaining traction. But there is a 200 moving average around 205. One has to be careful that as well, because if it dips and there is a huge packet of air here, right? Air packet out here. So it could dip into a 200 moving average very quick. But if it touches 200 moving day average, I probably go and load a lot of calls, but long dated calls, either October or year end, 220 to 230, out of money calls. I expect IWM will resume uptrend once it touches this 200-day moving average. At least it will try to bounce back to 220 area. So that's my thought. But wait for some more dip before you start initiating position in IWM. I'll quickly go to Facebook. It's another favorite stock for many of us. Facebook, last 3 days, Facebook dip buying was not working at last 3 days. Facebook dip buying was not working at all. It was falling, falling, falling. Up from all-time high to 341. I don't like the price action. Again, same thing here. It's If you look at RSI, almost from 28th June, in the last 15 days, 16 days, it's fallen very sharply. Right now it's almost at 47, below 50. So it's below 50, so it is bit dangerous side of it. It could dip further. I'm suspecting it probably trying to approach 50-day moving average 333. Facebook earning is I think on 27th of this month. So that earning news will provide support, and clarity could emerge after that earning report. Until then, I would be really careful. If it dips to 50-day moving average, I would start initiating new position. Probably I would do only on the shares, long on shares. If it touches the 50-day moving average, still I would avoid call options until RSI shows up a real recovery path. Right now, momentum also going down really bad. So and ADX is also at around 23 and shows technical weakness. So be careful with the FB. Let's look at another favorite one, Apple. Apple is really good. It held up really well after reaching all-time high around close to 150 on Thursday. It started dipping. It's right now it's barely close to 10-day moving average. There was a news that Apple given instruction to their suppliers about 20% increase in their production. So that bode really well for their products. I don't know how their earning would look like, but next week, the next 2 weeks going to be very interesting. But technical looks very strong. ADX is 40. RSI is still bullish zone, and I like this momentum also. It's intact. But if broader market is weak, I don't think Apple could. Or broader market is weak, I don't think that would help Apple to lift off. It may probably, I suspect it could probably stay there and do some sort of, on the sideline, doing zigzag motion, maybe dip a little below 10-day moving average, then resume uptrend. But technicals look really stronger for Apple. But if I have call options, I would nimble it to a little bit to be on the safe side. But I wouldn't go for put option here. Definitely, I don't think this will dip really big in next 2 weeks. So trade accordingly. Let's look at Amazon. Jeff Bezos is flying to space on Tuesday, I believe. So if that trip go for success, expect market Amazon to bounce back a little bit. But right now, RSI is dipping really bad from almost 75 to 55. ADX is okay, momentum is also okay, volume is okay. This one definitely highly volatile one compared to other big in the big tech space. So trade very carefully here. I wouldn't initiate any new position in Amazon. until after earnings, and then also see, when RSI start doing uptrend. Until then, I would be careful with this. Amazon, I wouldn't touch. So from big tech, I like Apple. The technicals are really good. Then let's see Microsoft MSFT. It's RSI is in bullish zone. In MSFT, momentum is intact. ADX is almost reaching at the top level, so that means it's almost like overbought level. I would expect Microsoft will resume uptrend because it's almost touched 10-day moving average. So I would expect Microsoft to resume uptrend. So from the big tech space, I like both Microsoft and Apple, both relatively speaking, and a technical perspective, they exhibit really strong. But if broader market is weak, I don't expect them to perform well. So look at in correlation with SPY, and if SPY resumes uptrend, I would expect Apple and Microsoft to pick up the stream. So trade accordingly. But I like the chart, Microsoft chart, I like it. Then let me quickly move on to energy space. Exxon, my favorite, big cap energy play, but its price action has been very pathetic actually last 1 week. Starting 2nd of July, it's started falling from around 63 to 57. It's really bad, really bad. RSI is almost reaching bottom, oversold condition. So I would expect few more days to touch this area 55 to 56. I would wait for Exxon to touch 55 to 56, then will bounce back to 60. That is what I'm expecting, a bounce back from the oversold condition. But I wouldn't touch this energy play for long term. Short term, once it touches 55 to 56, I would buy and let it ride until 60. But I wouldn't hold it though for longer term. Especially Biden administration, they don't like fossil fuels. A lot of regulations are coming. From fundamental perspective, I don't think any future out there for fossil fuels. But short term, time to time, you can look at the technicals when it is in oversold condition, as in right now. We can do some play on the trading side, specifically for short term. That is on the Exxon Mobil. So let me take a pause on this. Overall, market look like a bit weaker. So trade carefully next week. Wish you all the best. And if you like any individual stock or something, post it in the comment section. Let me take a look at, and I can post the video on that stock specific chart you may like. Once again, thanks for watching, and if you like this video, please subscribe to it. I intend to post periodically more videos about this. Thanks.